Hi everyone, in this video I'm going to show you how to do technical analysis on EURUSD and GBPUSD. We'll also look at the DXY and how it correlates with the analysis of the USD pairs. Let's get started. So first of all, what you want to do is you want to go on tradingview.com, load up your chart. In the top left corner, if you search for the DXY, which is a dollar index. So this is what we use to help us indicate where the USD pairs are going next. So remember, if you trade the USD pairs, you need to always look at DXY first. This is a good indicator where the dollar is going next. So if you load up DXY, you always start on the weekly time frame. You want to trap the price between two levels. You want a support and a resistance on the weekly time frame. You can see a support here. This is where price has made a higher low. It's also a point of reaction where prices change from bearish to bullish. Here we can clearly see that there's a resistance. Prices fail to breach this level. It's also a point of reaction where prices change direction from a higher high, and you can see price was bullish, it's changed to bearish. So here you've got your two levels on the weekly time frame. You then go into a daily time frame where each candle represents 1 day of price action. So what you do is on the left hand side you'll see a rectangle tool out. We're just going to draw zones where our higher lows and higher highs are. So currently we can see this is the most recent higher low. So we can say that this is the support region on a daily time frame. Once you've done that, you want a resistance as well. So you could put this as a resistance, or you could have it here. So I'll put it here, so it gives it a bit of breathing space. This is also a potential resistance where it could fall down further, but just to give you a bit of a two zones, so you can see price once it's here, it could go up to here and come back down. So price always moves between two levels. Obviously there is a potential resistance here, so we'll see how price action plays. It could just make a high low and then go further. So always like a bit of distance between the daily levels, so you know where it's going to travel to and from. You then go into a H4 time frame. This is where each candlestick represents 4 hours of time price action. So again, you get the rectangle tool out. You want to mark your support, which is here. Why is that support? Because you can see on a H4 time frame there's a point of reaction. It's right where the price action changed from bearish to bullish. So that is a support. And then what you want to do is you want your resistance on a H4. So again, this is a level that we could see on the daily. We can use that as a H4. So price is currently at H4. If it rejects it, we can expect price to go down on a H4 time frame. Or it could just go past it and use resistance as support. So it could just go here and come back down, or it could breach it, retest it. The resistance is now acting as support, and then it could go up to the daily. So that is how we can use the DXY to suggest where the price is going next. So currently price is at resistance, so we need to wait and see what happens right now. Price can either form a bearish candlestick. Sorry, I know it's not very good. I've drawn some sort of teardrops. These are supposed to be candlesticks here. If price has formed a bearish candlestick around here and it's breached this green bullish candle, then we can indicate price to go down. If price goes down on the DXY, that means the EURUSD pairs are going up. I'll repeat that again for you. If price is going down on the DXY, price is currently at resistance. If price is going down from this region, we can expect the USD pairs to be going up, which means today would be a buy trade on EURUSD and GBPUSD. So we can assume, because price is at resistance on the DXY, I can guarantee you 90% EURUSD and GBPUSD will be on a support. They'll be on a support level, and they'll potentially be spinning doji, or we'll see what's going on the next chart now, and we'll see if it's going to go up or if it's going to go down. We don't know yet because it's not ready. You see here on this candle, it's not ready. Yes, there is momentum slowing, but it could be the case where it's just taking a breath and could continue to go up. So we don't know. We need to wait and see if this candle is breached, and then it's going down. Then we know for a fact it's going down, and then we can enter a buy trade. So now that we've done our analysis on DXY, we'll then go on to the Euro USD and we'll see what's happening there. So you always start on the weekly time frame. And you want to mark your support and resistance levels. So as you can see here, there's clearly support and clearly resistance. Why? Because price has changed from bearish to bullish here. It's failed to breach down further. Here's the same. It's made a high. Price has failed to breach it. Price has changed direction from bullish to bearish. Simple as that. You got your two levels. You can expect price to be moving in between these levels here. You then go into the daily time frame and you want to repeat the process. You just want to mark your support and resistance levels by using this rectangle tool here. So I can clearly see that is the most recent resistance level, and now we need to mark a support level. So you could say there's a support level here. That is the most recent high low. So as I was saying, the DXY is potentially at resistance, it's potentially going down, and I said there's a 90% chance the USD pairs are at support. It's at daily support. How do I know that? Technical analysis, you always look to the left, you always look in the past. Price tends to repeat its behavior. You can clearly see there's a high low here. Price has used this as support, so it could be using it as support as well. As you can see, there's a massive candle wick here where sellers are pushing the price down, buyers have pushed it up. Rejection of the level, potentially, we don't know yet. But that's the levels on the daily. You then want to go on to the H4 time frame and repeat the process again. Here you can clearly see there is a H4 level resistance, and here is your H4 support. Now you can see that we're going on to the H1 time frame where each candlestick represents 1 hour of price action. But I want to repeat the process once again. So before we do that, get the Fibonacci retracement tool out. Today is a Monday, so this is analysis that you should be doing before the week starts. So if we're looking at yesterday's price action, or in this case Friday's, these are the levels that we would be using. So before the market opened today, London session opened at 8 o'clock this morning, we would have used these levels on a H1 ready for when the market opens today. So I know these are my intraday levels. Once price gets to this support level here, we're looking for potential buy trades. But remember, you always look at the DXY to indicate where it's going next. So when market opened here, we could have expected it to go down, but it didn't. It continued to go up. So there is no buy trade at the moment. Even now, we don't know what's going on. Is price going to potentially go up, or is it going to go down from this region here? We don't know. Price is not ready yet. A trade is not ready. Remember, you don't trade every moment of every day. You only trade when price is at a level or near a level. So now price is at a level. It's relatively close to the level. Now we just need to see what's happening next. So as I said, Monday, London session opened. We were expecting buy trades. It didn't happen, which is fine. This is why you use a Fibonacci retracement tool. You know, if price breaches this, it's going to act as support. The support level is going to act as resistance. It's then going to continue to go down. So you use your Fibonacci retracement tools as potential TP levels. So you know if price does continue to plummet from here and it is bearish, this is your TP1 level here, minus 23. And you know if it continues to go down, there's your TP2 level here. And as you can see, even before price action move, let's just say you don't know what this is going to happen. Remember, I said this is what you do before the market opens. This is what you do the night before. So remember, I said you're doing this the night before Monday opens. So Monday session opens. Remember, these are your levels. However, you know if price doesn't retrace from this level here, you know it's going to go down to this level here. And if it does, if it goes further down, you know it's going here. And look at that. That falls on a H4 support. It also falls on a daily support. So that's how accurate your Fibonacci tool is. It can help you predict where the price is going next. Because remember, we don't know this price action. We don't know what's going to happen the next day. The way technical analysis works, you're going to be 70% accurate. You're not going to win every single trade. That's how technical analysis works. You're going to increase your chances of winning. Remember, I always say, you only need to win 4 trades out of 10 to be profitable a week. That's all you need to be. You need to be winning 40% of trades. So with this tool, I know price is going to go to either here, TP1, or here, TP2, and you can see it's done that. So now we're looking for potential reversal. Remember, it depends on the DXY. If DXY goes down from here, that's perfect, because then we know there's a buy trade on EURUSD. So we just have to wait and see. So what I'll do, I'll show you, because price has now made a new lower low, we need to update the levels. So remember, this is the levels that you would have had when price action opened 8 o'clock in the morning London session. Price has now been updated. The price has made a new lower low. So what we do is, you can see this Fibonacci tool here. This is the current level that I had. We're now going to make it this level here. So this is now your intraday level, H1 support level for Monday, the 10th of June. So if you want to do this yourself, you know that this is a live price action. This is a support level now. So you know, price at support, price, if price closes above this level, we know potentially it's going up. But remember, you need to look at the DXY. So before price does that, before price goes up, you would expect the DXY to go down, which is why we always look at the DXY. Don't look at the USD pairs and then the DXY. The DXY is a dollar index. It's going to show you where dollar is going next. So we'd always look at this first. If this is going down, if this is bearish, then we would take a buy trade on EURUSD. So it's not ready yet. It's potentially going to reverse and then go up, or it could even go down further. Remember, I said the Fibonacci tool on the H1. So now this is our updated Fibonacci tool, Fibonacci level, sorry. You can see if price does retrace, if price does breach the resistance, support, it'll act as resistance. It'll go to TP1 here. You could potentially take a buy trade, sell trade here. This will be TP1. Price could continue to go down. This will be TP2. So we have to wait and see. We have to wait and see what the dollar index shows us. So right now there is no trades. This is how I would have a trade set up for EURUSD. Now that we've done EURUSD, we'd look at GBPUSD, which is a similar price action to EURUSD. So we'll go ahead and analyze that. Top to bottom analysis. Start on the weekly time frame for GBPUSD. I'll clear these drawings and we'll do it from scratch. On the weekly time frame, you want to trap the price between support and resistance. Here's your support, here's your resistance. On the daily time frame, we'll repeat the process again. You want to get this rectangle tool out and draw your support and resistance levels. Here is a resistance on the daily time frame. And you want to see your support here as well. So price will travel between these two on a daily. On a H4 time frame, you want to repeat the process, rectangle tool out. I can clearly see there's a H4 resistance, which also falls on a daily. And we can see here that there is a support level here. So price at support, which also correlates with the EURUSD at support, which also correlates with DXY at potentially at resistance. So this is how I say the DXY is interlinked with the GBPUSD and EURUSD. You could say it's negatively correlated. If DXY goes up, GBPUSD and EURUSD will go down. So this needs to go down for GBPUSD to go up. It is showing a bullish candlestick, however, it's not ready, in my opinion. We need to see DXY to go down. We need to see bearish, something bearish here. If price breaches this and goes down, then I can take a buy trade. But currently it's not. It's using it as support. The resistance is now potentially acting as support. It's not ready yet. It's not ready yet. As you can see, once it's breached this level, it will be definitely bullish, but it hasn't. So we've done the H4 analysis. Now on to the H1 time frame, and this is where you get your Fibonacci retracement tool out here on the left hand side. Remember, we're looking at Friday's price action. So these would have been your levels before the market opened. So I'll just show you again what it would have been like. So this is what you would have been like this morning, 8 o'clock. I would potentially look for buy trades here. Obviously, looking at the DXY, it wasn't ready. There was no buy trade, but this would have been my trade setup. You can clearly see on the DXY, as I said, we were expecting it to go down from here. It didn't. It continued to go up, which means GBPUSD continued to go down. Remember, I said we use a Fibonacci tool to see where price can retrace or where it could potentially continue to be bearish and show you a new TP level. So we knew if price breaches this level, as it did, it will go to this minus 23%. If price breaches this level, it will go down to this level here. And what's happened? It's exactly done that. This is how accurate my analysis is. This is how accurate technical analysis is. You only need to know support and resistance. That's all you need to do, guys. Look at this. I knew if price breached this level, it would go down to this level here, and it has done. That's a H4 support. Now, because it's made a new lower low, as we did on the EURUSD, this is now your new level here. You could do it to the wick, you could do it to the body. I like to do it to the wick. This is your new H1 level. So we would need to see DXY to be bearish in order to GBPUSD to be a buy trade. It's not ready yet. As you can see, you had a massive bullish candlestick, but the following candle, you can see there's no momentum here. The buyers have tried to push the price up, the sellers have pushed the price down. There's a massive candle wick here, which suggests it's going down. As you can see here on the M15 time frame, it's going down. It's not ready yet. So what I would do is I expect price to retrace here. Once it gets to this level, H4 and the H1, I would expect to do a buy trade if the DXY is bearish. So if I was doing a buy trade here, this would be my trade setup. I would be risking approximately, I always like to do 10 pips max, but in this case, I'd be risking 12 pips to win 110 pips. That is a risk to reward ratio of 8.93. That's if it goes that far. It could just go to this level here. This would be a TP1. This would be TP1 here. 30 pips. If it breaches that, then you know you can increase it to 110. But I trade H1 levels, support and resistance, so I expect price to go from this level to the other. At least, if not, then at least up to here, 30 pips. So yeah, I hope you enjoyed that session, guys. I just showed you how to do the analysis on the DXY and how this negatively correlates to the GBPUSD. I try to do this as quick as I can, but I explained every scenario of the price action today and why the trade is not ready. I've also showed you a risk reward management tool where I would enter a trade and how I would manage my risk of 12 pips to win 110 pips. So what I would do is, it's still about 2 p.m. in the UK. If it gets to 5 o'clock and price is still retraced, I wouldn't enter a buy trade. I would potentially wait for tomorrow's London session, or you could even see the Asian session tonight. If you trade Asian session, price could then be ready for a buy trade. But right now it's not ready, guys. Hope you enjoyed that session. Like, share and subscribe. Peace.